I became a millionaire at 28 years old and I'm 31 years old now. We're about to cross 8 figures this year as a company. I'm very proud of how far we've come, and I don't say that to brag. I say that because I am proud of what my team has been able to accomplish. That being said, we don't pay a lot of taxes as 7, almost 8-figure earners running a tax and accounting firm. And I believe that there's certain techniques that I've been utilizing over the last couple of years that I want to share with you guys that you can utilize too to reduce your taxes. Without further ado, let's dive in. All right, guys, for those of you guys that don't know who I am, my name is Karlton Dennis. I'm a licensed enrolled agent. I'm not a CPA. I could have chosen to go to school to become a CPA, but that wasn't my career path. I wanted to play football professionally, and unfortunately that didn't end up happening. So I decided to start working in my mother's accounting firm when I was 21 years old. Fast forward to now, I'm 31 years old and I have 10 years of tax experience, and I've been running a 7, almost 8-figure tax and accounting firm, helping out business owners, entrepreneurs just like yourself. That being said, me and my wife have done an incredible amount of work to set ourselves up to not pay taxes, and we do things every single year to make sure that that happens. The very first thing that we do is we believe in getting on top of our taxes at the beginning of the year. Now, most people, when I say most, I'm talking about 99% of all taxpayers, they're focusing on filing their tax returns for the previous year during the months of January, February, March, and April. I know that it's tax season, and I know that we all have to file our returns during that season. But rather than focusing on the returns from the previous year, I am already forecasting my income in the months of January, February, March, and April. And the reason I'm doing this is because if I know how much money that I'm expected to make in 2024 already in the first 3 months of the year, I have a better idea of how much I'm going to owe in taxes. And if I have a better idea of how much I'm going to owe in taxes, I'm starting to figure out how much money do I have to spend in order to reduce my tax bill. You see, the game of taxes really comes down to spending. And for most business owners, they don't want to just spend their money on nothing. Sure, you may need to buy equipment. Sure, you may need a vehicle. But let's be honest, there's only so many vehicles that you can buy, and there's only so much equipment that you can buy. And this when investing becomes so important. I invest early and often with my wife into multifamily rental real estate. And here's the reason why. The IRS created a rule called real estate professional status. What that means to you is that if you can show the IRS that you're spending a certain amount of time managing your rentals, 750 hours, and you can show the IRS that you're spending more time in real estate than any of your other businesses or jobs that you have, the IRS will allow for you to take deductions with real estate against your business income, against your W-2 income. So what me and my wife do is we find real estate early in the year, multifamily real estate that we can go into escrow on. And we're looking to find real estate that has a building amount of at least 90% with a land ratio of amount of about 10%. This ensures that when we do strategies like the cost segregation study and we create this loss on our tax returns, that the loss is going to be big enough to help offset the S corporation or flow through income that comes over from our businesses. So this is what we do. We make sure we project out our income and we figure out what type of multifamily real estate that we want to buy to qualify my wife as a real estate professional and to do the cost segregation study. Now, is that the only thing that we do? Spend money on real estate and buy multifamily? Absolutely not. There's tons of other things that I'm doing with my money in order to reduce my tax bill. One of the most important things that we do to reduce our tax bill, especially right towards the end of the year, is income shifting strategies. Now, many of you guys have been on my YouTube channel and you've seen some of my income shifting strategies that I teach on. Shifting money to a 401k account or placing your children on payroll. But I only have one child and she's about 7 weeks old. So there's not gonna be a whole lot of income shifting to do to a 7-week-old. But if I have a private family foundation, a philanthropic entity that I'm in control of, that my family members are on the board of, I can shift income at the end of the year to my private family foundation and receive up to a 30% deduction against my adjusted gross income. Let me give you an example. Let's say that my income is $1 million in the month of December. Well, the IRS will allow for me to wire $300,000 to my 501c3 foundation for a tax deduction. Let's say that I'm at a 37% tax rate. Just that deduction would probably save me a little bit over $100,000 in taxes. That being said, I've moved the money over into a 501c3 where I will have control over those assets. Yeah, I can't spend it on myself, but I can spend it on being philanthropic. And yes, my family members can be a part of that charity that I choose to run. This is an income shifting strategy for high net worth individuals. And for many people that are growing their wealth, they may not be so, open to the idea of shifting $300,000 into a foundation. But I know that I would rather shift $300,000 into my foundation as opposed to giving it to the government and letting them decide how they want to spend the money. What if I'm not at the end of the year yet? What if I bought real estate and I still need other write-offs? What can I do to reduce my tax bill? This is when looking at advanced tax strategies makes a lot of sense. One of the areas of the tax code that not many people explore is oil and gas credits and solar energy. One of the things that I've looked at is starting a solar business. Now, I'm not trying to shift gears here and move away from tax strategy. Quite the contrary. What I'm trying to do is provide solar to other people. You see, by strategically buying the solar panels and the solar equipment and sourcing that solar panel and solar equipment to another third-party person who needs the energy, who needs the solar on their house, I get the tax deduction for buying the equipment, plus I get the tax credit that the government offers at 30% of the acquisition cost. This ends up resulting in a tax deduction for running a business and a tax credit at the same time that I get to use to wipe out taxes for me and my wife. Not to mention, solar does give off energy, which means it relates to dollars. So ultimately you can earn cash flow by setting up solar panels for other people on their houses. What about oil and gas? One area of the tax code that's not as sexy as many other areas of the tax code, but one that I've explored into. By investing in oil and gas, you're essentially investing in a business where you get to write off your investment. The IRS allows for you to write off the tangible and intangible drilling costs, and many taxpayers who are going into oil and gas are able to take huge amounts of write-off in the first year because the majority of the expense that they have in the first year is tangible drilling costs, the actual machinery and equipment that is needed to build the oil rig. That all gets depreciated on your tax returns, and it could create a loss that can offset your W-2 and 1099 income. Now, we've talked about real estate investing. We talked about qualifying my wife as a real estate professional, formulating a cost segregation study on real estate that's at least 90% building value, 10% land ratio. We talked about a private family foundation. I even sprinkled in there solar and oil and gas. But one other thing that I want to make sure that you guys are fully aware of is the management company strategy. Because my business typically pulls in a lot of cash, we sometimes shift income into a management company that manages over my S corporation. Because this management company is on a different fiscal year end than my S corporation, it doesn't file tax returns in the same year that my S corporation does. By moving money over into our management company at the end of the year, my S corporation receives a deduction, and this management company files tax returns almost 365 days later than my S corporation, allowing for this management company to strategically spend money at a slower pace than my S corporation. Now, have we started getting into some of the advanced strategies? Absolutely. But this is exactly why I love tax planning. And if you're somebody that's watching this video right now and you're feeling inspired, here's what I want you to do. I want you to click on the link below, schedule a complimentary consultation with my team, allow for us to build out a tax projection for you to determine what strategies would make the best sense for you to leverage with the time that's left in the year. One of the most important things that we offer is 100% audit protection. If we're gonna leverage a strategy for you, we're gonna make sure that we have the tax code, the court case ruling, and make sure that we support you on the tax return. My name is Karlton Dennis. I just shared with you a couple of ways as a millionaire that I've been able to avoid my taxes. These are things that I'm doing every single year that are 100% legal within the tax code. I enjoy offsetting my taxes because I get to spend money strategically that turns around and puts more dollars in my pocket, as opposed to just giving away that money to the government, not really knowing what they're gonna do with that money. If you're somebody that believes in leveraging the tax code, I look forward to seeing you at our next live event. And until next time, I'll see you on the next video. Cheers.